Last Tuesday, in my newsletter, I wrote the Dow Jones Industrial, the S&P 500, and the New York Stock Exchange composite made a new high on Tuesday, and I expect either the S&P 500 or the Dow Jones Industrial will see another all-time high before the market reverses. Then on the following day, we see that the Dow Jones Industrial closed with an unconfirmed high, and I said that is a message for the market to tell us to prepare for a near-term correction. And ever since the Dow Jones Industrial made a new closing high on Wednesday, we see all the indexes in the market all pulling back. And look at the monthly chart for the S&P 500. We see that the S&P 500 is still hanging on to a gain of 0.8% or so for the month of July. And notice that it is forming a shooting star type of a candle. And for the Nasdaq 100, it is hanging on to a loss of 0.8% for the month of July, and it too forming a shooting star type of candle. So are we seeing the market changing and that the reversal is coming soon? In this video, we're going to take a look at the price action, the market internal, and some of the key sector and see what the market is telling us. Here we are looking at the weekly chart of the S&P 500, and notice that we have a engulfing candle last week, a bearish outside bar. And the last time that it did that is back here near October 2022. And as a result of that, it actually retraced approximately 27%. So if that is to occur again here and we trace 27%, then we're basically looking for retracement back down to somewhere around this 4,200 level. And looking at the Nasdaq 100 weekly chart, we see right here it is forming a evening star type of a candle formation. And the last time it did that is also back in October, sometime in October 2022. And it resulted in a retracement of somewhere around 38%. And if that is the case, then we're basically looking for the Nasdaq 100 to possibly come back down near this 13,000 level. And I will go into a little bit more detail on the level to watch for the coming week in later on in this video when I discuss the SPY and also some of the FANG stock. And looking at this sentiment chart here, we notice that the VIX actually came up to 16.5 on Friday. It bounced off the 12 and the 13 level. And also the put call ratio is coming back into this hedge zone and it's sitting near this 0.75. So definitely the market participants are getting less complacent and starting to put on some hedges on their positions. And here on this internal, we see that the up-down volume ratio for the last 3 sessions of the week is actually negative, and also the advanced decline, the daily advanced decline, showing more declining issue than advancing issue. And on Thursday, we actually have broad market participation on the downside. Even though on Friday, it doesn't seem to be that bad, but it's still, we saw minus 765 more declining issue than advancing issues, with a up-down volume ratio of almost 1.5 to 1 in favor of the down volume. And for the New York Stock Exchange, new 52-week high versus 52-week low, the new 52-week high still outnumbered the 52-week low by a number of 32 on Friday, but you see the contraction on the number of stock that made new 52-week high. Remember, a few days ago, even the day before, it was over 200, and on Friday, it contracted down to 50. Although the number of stock making new 52-week low did not come up, it remained down at the low double-digit level. And looking at the cumulative AD line from the New York Stock Exchange and also the S&P 500, we are not seeing any divergence. And for the Nasdaq market, we see a little bit more negative or more selling pressure from the up-down volume ratio. And it is actually a little bit over 2 to 1 in favor of the down volume on Friday, with over almost 1,300 more declining stock than advancing stock on Friday. And almost believe this is somewhere around 2,500 on Thursday, 2,500 more declining issue than advancing issue. So that is almost 90% of the stock were down on Thursday. And in the new high, new low, we actually saw more new low, more 52-week low on Friday in the Nasdaq market. then a new high. So you can see there's quite a contraction here. We were up over 200 on Thursday, and on Friday there's only 55. And notice that we're down at the teen level early in the part of the week. The number of stock that is making new 52-week low, and on Friday it expanded to 106. And here you can see the deceleration of the AD line in the NASDAQ market versus the NASDAQ 100. So right now we are still looking at this huge negative divergence that has been made, and we're still looking for resolution. And when that resolution comes, we will expect to see more downside in the NASDAQ market. So as far as the sentiment and also the internal, we are definitely seeing a little bit of a shift and a changing tide a little bit. So we have to prepare for a little bit more downside. Now let's take a look at some of the sector here. First, starting with the 11th sector in the S&P 500. We're looking at the XLK, the technology sector. As you can see year to date, it is still holding a pretty close to 15% gain. And then, but on month to date in July, it has actually lost 2.37%, and last week it lost 5.5%. Now notice that it popped above this trend line or this channel here, and now it's pulling back. Last week we saw it pull back into this channel, and also this EMA cloud and also the SMA cloud seems to be turning down a little bit. So that kind of changes the momentum a little bit here, and right now it is sitting right at this low volume area. So for the coming week, it is important to see if the XLK be able to bounce off of this low volume zone and come back up and possibly work on filling this gap. But if it doesn't do that and it decide to move down toward this, pass through this low volume zone, then we have to watch this 215 level. And if it loses that 215 level, then look for the possibility of coming down to this high volume node near this 204, 205 area in the near term. And here looking at the healthcare sector, remember I said the healthcare sector is a little bit more of a recession proof. So you see that it broke this resistance here last week and then came back in. So right now we could see the possibility for it to come down to this high volume area, 146 area here, to see would it be able to get a bounce back up and try to make another breakout and into a new high here. Now, if it doesn't do that, then we'd be looking for this thing to come down and possibly get down to this 144 and check this trend line here and see what this trend lines provide any sort of a support. And also, in addition to that, we see that year to date, it is still holding close to an 8.5% gain. Month to date, about 1.5%. It did lose a little bit over 0.25% last week. And here looking at the consumer discretionary, the consumer discretionary was trying to get up to this trend line here, this upper channel, and failed to be able to reach up that level there. So right now it's pulling back a little bit and sitting right near this low volume area between 187 and 185. So for the coming week, it's important to see would it be able to get a bounce off this is 187, 188 level. And if it doesn't, then we'd be watching for it to come to this low volume zone and dip below 185 and then possibly come into this 179 area, this high volume area here, to see would it be able to find some support and get a bounce off of that. Now looking at the year-to-date gain, it's still holding a 5% gain here and also 3% month-to-date gain. But last week it lost almost 2%. And looking at the financial have been the bright spot recently here, and right now it seems to be pulling back to this low volume area as well. It's sitting somewhere around 42.85, so it's important to see if we'll be able to get a bounce back up and put in another new all-time high. But if it comes to this low volume area, then I expect it to come down to this 41 area, near this point of control, composite point of control at 40.95. And if it failed to hold that, then I'd be looking at the possibility for this thing to come down and test the lower level near the 40 area. And looking at the return so far year to date, it's holding close to 14% gain, and month to date 4.25%, and last week it gained 1.1%. So still financial is holding pretty strong in the recent week. And looking at the communication sector, the communication sector also was quite strong in the recent week. But until recently, we saw it pull back. And actually, if you look closely, it is putting a sort of a lower low and lower high, and it is breaking below this SMA cloud here. So right now, the key thing to watch for the coming week is this 84 area, this low volume zone here. If it comes down, we want to see a little bit of a bounce off of that and see what it provides some support. Now, if it doesn't and it just slide right through, then we'd be looking at this level here at 81 and then eventually come down to this 79.5 or so. So that's basically what we're going to be keeping an eye out on the auction for the coming week for the communication sector. Now, the communication sector is so far year to date is the strongest sector. It is holding a gain of 17%, but for month to date, it actually lost a little bit over 0.5%, and also last week it lost 1.39%. So you can see the shift in the the direction or in the tone of the market here. Some of these recently strong sector is rotating down and sort of consolidating on the downside. And looking at the industrial sector made a new all-time high last week and then pulled back. So right now it is back inside of this high volume area here, and I expect it to continue to come down and possibly test this 120 level. Unless it could break through and break out of this upper edge of this high volume area and pushes up into this major move, this 80% major move or this symmetry move, and that would be somewhere around 132.5. But right now, I am more inclined to watch the industrial pull back and at least come down to test this 122 level. And looking at the consumer stable, we see the consumer stable being quite strong recently. It broke this little bit of a downtrend. Right now, it's kind of pulled back a little bit. So I expect this thing to continue to push up and try to get up to this upper channel. Now, if it pulls back, then I wouldn't be surprised to see it come back down to test this trend line or the lower part of the channel, the price channel for support, and that would be somewhere down here at this 77 level. And for the energy sector, it finally broke out of this little bit of a longer term or intermediate term downtrend here recently. And right now, it seems to be pulled back a little bit. And I'd be watching the 92 area here. If it comes down right now, it almost came down to this level last Friday to see how it will perform. If it could get a bounce back up, then I'd be looking for the energy sector to continue to move higher. And I wouldn't be surprised that it will come up to this 100 level. But if it breaks down and decide to move through, then I'd be watching for this area here for the next potential support down at the 88 level. And if we look at the year-to-date performance, the energy is actually holding up very well. This is up over 10% year-to-date, month-to-date 1.34%, and last week it was the top performer. It was up 2%, a little bit over 2%. Here, looking at the real estate sector here, we see that on Thursday, this long wicket topping wick, that could be a sign of a little bit of a near-term exhaustion here, and we see it pulling back. So I wouldn't be surprised to see it come down to this 39.50 area and see would it be able to find some sort of support and bounces back. Now, if it doesn't, then I expect it to come down to this area here and work to the high volume area and come down to this somewhere around 37.5, 37.75 area here for maybe possible support or test of support here. So we'll be keeping an eye on the real estate sector to see would it be able to get a bounce here. Now, if it continue to push up, then we'd be looking at this trend line here somewhere around 42. Again, this is a descending trend line here. So unless it could break out of this, we still expect it to pose potential resistance to push the price back down. And looking at the year-to-date performance, this is holding just a little bit over 1% gain, but month-to-date is 5.5% or so. And last week it gained 1.3%. And that was the second best performer for the week. In the material sector, it came up and bumped up against this resistance here and start pulling back right now. So I'd be looking at the possibility for it to retrace back down to this 87 area, to see would it be able to find support and then bounce back up. Because right now it's still pretty much in the range here between this 92 and 87. So I'd be looking for this bouncing back and forth until it either break above or break below, then we'd be looking at a little bit more substantial move. So right now, we still consider this to be in range bound. And for the year performance, the year to date is up 5.34%, month to date 2.04%, and last week it lost a little bit less than 0.5%. And for the utility sector, you see that the utility sector, the moving average cloud is kind of pinching together here. So expect to see some sort of a directional movement away from this pinch. Either we're going to explode to the upside or come down to the downside. If we come down to the downside, watch this 68 level here. That's basically this pivot low, somewhere around this pivot low here. If it come up to the upside, we're basically looking for this high to get taken out and possibly come up and test the prior high up here near the 73 area. And for the year-to-date performance, right, the utility is holding 10.25%. So that is quite large for utility, because looking back and look at the XLK, the technology is only 4 percentage point higher than the utility, versus also the communication is a little bit under 7% more. So again, it is quite strong for utility, which is a interest rate sensitive type of sector. And for month to date, actually holding a gain almost 3%, but last week it did lose 1.5% or so. Now let's take a look at a couple of these major sector here. First is the semiconductor sector, the SMH. You see the SMH is still holding almost 42% gain for the year to date. Now, for the month of July, it actually loses a little bit over 4.75% and 9.5% last week alone. So if we look at the chart here, you see that it came up to this price channel, and ever since then, it pulled back. And also notice that the moving average cloud is crossing over. And right now, we are seeing the price pulling back. And I wouldn't be surprised to see it come down and test this the lower trend line of this price channel here, somewhere around this 230, 235 level here. So probably, keep an eye out for this area here, to see would the price be able to get some sort of a bounce off of this level here near the 230-ish. And earlier we saw the XLF, the financial sector in the S&P 500 was quite strong recently. And we see the reason why here. Looking at the regional bank, you see the regional bank broke this downtrend here, and ever since then, it kind of pushes up pretty strongly here. Right now, it is pulling back a little bit, so I wouldn't be surprised that we might see a little bit more pullback down into this area, somewhere around maybe the 54, and then pushes back up. So that's the regional bank, and right now we see a year-to-date performance of 6.79%. Month to date, a 14% gain, and last week it gained almost 7.5%. And here the bank, the little bit more larger bank right now is sitting right here near the 52. So we could see this area here that could be tested. If it dropped below this 52 level, then we'll basically come back and retest this breakout level somewhere around 48, because it recently broke out of this consolidation area here, or this high volume zone. So right now we could see a possibility of back testing this and then pushes back up. Now, if it could remain above this 52 level, then we could see a continuation of a move up to a higher high. And for this sector, year to date, it gained over 13%, and month to date, 12%. Last week, it gained a little bit over 6%. So again, the bank financial is still holding up relatively strong. So what we see here is a little bit of a change in the tide here. We see that the more of the defensive type of stock or the sector is showing some strength, while the growth and the speculative sector is, and also the consumer oriented is tend to be a little bit weaker now, as we see that the recession reality start to set in for the market to start repricing some of the expectation, although we are going to expect the Fed to lower the interest rate relatively soon. But again, like I said, the Fed is not lowering the interest rate for the goodness of their heart. It is because there is a problem out there in front of them that they need to go and address by lowering the interest rate. Now let's take a look at the SPY, the ETF for the S&P 500. On this daily chart here, notice that last week, the price moved up to the upper range of the expected move and came down to the lower range on Thursday, and then on Friday actually closed below the expected move, the range of the weekly expected move, and into the July lower range, and also back inside this high volume area. And looking at what the market is pricing in for the coming week, the upper range is between 558.30 and 556.90. And the lower range is between 540 and 538.50. And also notice the lower range is right in overlapping this low volume zone here. Basically, this is the area that we most likely could see the price come down and see if we'll be able to get a bounce if it remained to balance, inside of this balance area. But if it decide to bounce off, then we'd be looking at the possibility for it to come back up. And here's a little bit of a high volume node here, right inside of this upper range of this weekly expected move. So we can see this as a little bit of a potential resistance. So we'll see, would it be able to get a bounce off the 549 in the coming week and come up to this 558 or so, or if it could break out and it might even take out the all-time high, which I doubt based on the internal and some of the little bit of a technical damage from the prior week. So we need that to be repaired and firm up a little bit before we could see the next high, if it's going to come soon. But right now, I'm basically looking for the possibility of come down into this high volume zone and possibly come into this low volume area and see what we be able to get a little bit of a rejection and push us back up to this upper range of this balance area near the 549. So that's basically what I'm looking at for the coming week for the SPY. Definitely the market, the tide has changed a little bit. The internal is getting a little bit weak, and also the market participant are getting a little bit less complacent and starting to hedge their position. So I remain cautious in this market until the market tells us otherwise. Now, if you want to see additional content and more detail of my analysis of the SPY and also the ES, be sure to go visit my newsletter at Substack, and the link is smtraderca.substack.com. Thank you for watching, and be sure to smash that like to help promote this video. And if you are new to this channel, click the subscribe and support this channel. Thank you for watching, and good luck on your trading.